What's up, guys? Welcome back to another episode of Raw Stocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. We got a big week coming up for Tesla with earnings reports coming out after trading session tomorrow, and we got a lot to go into on the charts today. Sorry for not bringing you guys some videos over the weekend and recently. Waiting on a new PC to get here. Was supposed to get delivered today. Turned out I wasn't here to receive the package, so hopefully it'll get here tomorrow. We'll be up and running again, and hopefully we'll be bringing you some more videos because the PC that I've been using is not very well equipped to be doing content on. The new one I'm getting is going to be much better, so I'm hoping to be able to bring you guys videos more than just on Sunday, Monday, and Tuesdays, and maybe we'll bring some additional videos through the rest of the week. Before we get going, don't forget to check out the links in the description below. We got a link to the Raw Stocks Trading Discord. It's free to be a member, no cost to join. If you want to be a premium member where we got the call outs, the book study, and a private premium chat channel, it's only $25 to join. There is a $5 off coupon code right now. Coupon code SAVENOW. If you want to join the premium, give it a try. Today we had over $700 in premium call outs. Let's go ahead and dive into the chart. We got the weekly chart pulled up. I don't always take a look at the weekly, but I want to take a look at the weekly today. And what I want to notice is that on the weekly and the daily, it'll be more obvious on the daily, but on the weekly, we have this trend line of support that was broken last week. Now we opened with a gap lower than we closed, right, on the weekly. So currently bias is bearish on the weekly chart. Now we could bounce up, right, and test some of this breakdown candle, but currently we are trading below the low of last week. We got our levels here, 146. We've already broken that level. Next level down, 138.13. Next level down from there, 133.42. And you'll see where these come from on a daily chart. 124 below that. And then ultimately a test of the lows down to 114 and 101. Upside targets are previous liquidity spots of 184, 179. And then we can adjust this one here to last week's high of basically 171. So that's what we're looking for if we're heading up. Now let's jump into the daily chart. On the daily chart, we can see where some of those levels come from, right? We have a gap fill and equal highs here. And that's what we've already taken. We gapped that spot into open today, right? And so we've taken that level. Now we haven't come back up to test it. And what that could look like, and this could happen tomorrow, right, is that we pop up, run a test of that trend line, and then earnings comes out and we end up fading it and taking some of those additional levels. Totally possible. Right now we have basically like a spinning top doji candle. And if we were to gap up back above, we could have an island reversal here. Now, if that happens, we'd be looking again to see how we react to this trend line of support as we broke it last week. And if we can get back above it, we can see that trend line and that support level of 146 continue to hold as we try to push up. Right now, we got the 20 period moving down. This has been an aggressive move. So a move back up to the 20 period at this point in time would also be equally aggressive if we were to run a test on the 20 period. But what I think is going to happen is we're going to spend some time down here in this 140 down to 125 level as this 20 period comes down, and then price maybe consolidates a little bit, see if we can get up back above the 20 period, and then the 20 period could push us back up. But that could take some time. Tesla has just fallen drastically. I don't think earnings is going to, come out and shock us and just send us, flying to the moon. So we'll be watching to see what happens. We'll be watching those levels. Some other levels that we're looking at here there is a small volume imbalance that is all the way down at 114.89 to 119. That's where these two levels come in. We also have a liquidity level. That's where the 124.54 comes in. It's a previous low as we saw price pop down on January 19th of last year. So that gave us a low. And then we have another previous low here of 138.25, right? That'd be the most recent one that we test. Just a daily candle low that we haven't come back and tested yet. And then inside here, we have a gap that hasn't been filled, and I can put another level on there so we can see what that is. But basically, where is it? Pretty tight gap right there, 133 to 134, or 133 and a half to 134 and a half, basically. Small gap that hasn't been filled yet. So we'll be seeing if we push down and we fill that gap. Now, again, upside targets, lots of gaps. So if we were to start heading higher, we have Friday's high as a liquidity level that we could potentially test if we ran a test on that trend line, see if it offers resistance after it was broken support. Then we have gaps in between here, right? There's a volume or a complete gap and a volume imbalance there, 152 to 154. Then we got another gap here with equal highs. Hasn't been traded back into. And that's 158.45 to 161.34, right? And then again, we have a previous breakdown candle high up here at 170.96. Now it's going to take a little effort to get back up there, like I said, but we got that rapidly falling 20 period. So if we were to aggressively move back up to test that, we could definitely do that. If earnings comes out and shocks us and everybody starts buying, right now we're caught in between two levels. And still what I think is even if we start heading up, we might test that trend line somewhere around the 148, 147, 148, maybe up to 150, right? If we were to pop up there, test it, and then dump back down, I think that would be possible and likely. But we also have RSI that has just started to crest the oversold territory. Could definitely support a move down to 124, right? And also if we jump back to the weekly chart, we can see on the weekly chart that our RSI has not come down to a complete oversold reading yet. Even at previous lows, when we've hit major lows, we've had an RSI that crossed over the 30 just barely. Same thing with highs. We've had lots of RSI highs that went over 70. So anticipating that our weekly chart RSI is going to need to at least get to 30, and it's not quite there yet. So that could also support a move down to 124. Doesn't have to happen this week, but because earnings is coming up, we definitely have that catalyst. Go down to the 1 hour chart now. On the 1 hour chart, see today's price action. See today, opening candle, we popped up, we dropped down. We again had an engulfing candle. We kind of popped up and then faded into after hours. We're still below the 20 period. We've gotten some RSI that is starting to give us some strength, but that doesn't mean anything because a lot of times RSI on, low volume, not very big moves will end us up back around the 50. You see it here in this slight move up before we dropped. You see it multiple times over here where we start to push up and then we drop again, right? Right here as well. We push up to the 50 RSI, almost, not quite, and then we drop, right? So this could be another situation where we push up to the RSI 50, right? Gain a little bit of strength, maybe back up to this 146 number and then drop back down. So we'll see. Do we rally up a little bit ahead of earnings tomorrow? Or do we just continue to sell off, right? It wouldn't be out of the question to see a little bit of pop up, maybe back to the 146. It's not too far from where we currently are. It'd be if that was the case, it'd probably be a fake out where we crossed over the 20 period on the 1 hour, right? Got RSI back up to 50 or around, and then dumped down again into this 134, 133 area. And then if earnings are real bad, we're pushing down to 124. Last thing, I'll look at two more charts today. We'll look at the 15-minute. All right, the 15-minute shows us our time macros that we follow. We have our New York AM open. This is still pre-market. And then we have our silver bullet, which is market open to the 11 a.m. Time period. And then we have our lunchtime and our PM session. So we have our London open, which is our pre-market open. Right. And oftentimes what I've said in the past, and I'll say it again, is that when we don't get back up barely to or above the 50% level of London, and we don't end up taking the London high, a lot of times what we see is a dump back down during the silver bullet. Sometimes it's prior to silver bullet and the market opening that will push up to that 50 and then dump. Today, it was out of the gate. We pushed back up. We could not take that London high. That's weak. Right. And then we ended up pushing down. What we ended up doing too was we ended up taking the liquidity that was in these wicks. Right. As we pushed up, we tried to push up one more time. We ultimately get the flush. Where do we get the flush? We flush a previous macro low, right? We took it by a little bit more and we rallied up from there, but we never even broke the London period or the silver bullet time macro high. So when it can't do that, we're not looking for price to push up higher, right? You can see on our time macros, London high, silver bullet high, right? New York high. We're never actually pushing up on any of the major macros, but we're also just kind of consolidating because we didn't, after we swept the New York AM low, we never pushed back down to take the silver bullet low, right? And so just kind of a consolidation day, not surprising because we're heading into earnings. And so, again, what we'll be looking for is to see if we get back over this 15-minute, 20 period moving average, right? We're on the bearish side, but RSI is, steady. And so if we can get a little bit of momentum, we can see that push up to 146.25, right? Which would be testing, maybe even gap fill at 146.73 if you include the after hour sessions from Friday. But we would be looking for somewhere in between there. And then, see what price does from that point. We also have an order block on the 15-minute time frame that takes us all the way back up to the 150, which is also where that trend line of resistance happens. So maybe what we could see is, trading up, maybe a little bit down into earnings, maybe earnings, immediately delivers into that order block. We saw it with Netflix, where price ran up into the order block and then ultimately dumped down into another order block and sold off. So that wouldn't be out of the question too, regardless of what tomorrow's price action looks like, that, earnings hits and then boom, spike up to the order block and then come down like that. So, just be mindful. Earnings is going to be a huge driver, whether it's to the upside or the downside. We anticipate a lot of volatility once we go into earnings. I wouldn't expect massive moves to be coming ahead of earnings. And if you're an options trader, just be careful because the implied volatility is much higher. And so if you hold those contracts over until the next day after earnings, IV could potentially crush those contracts. Last thing we'll look at is the 5-minute chart. Not going to go into the 1-minute chart today, but on the 5-minute chart, you get a little better look at the silver bullet time macro, right? Again, we get our opening candle, right? Flushes the liquidity that was in the New York AM kill zone, immediately runs up. I didn't take the long, I took the short here after we delivered on the liquidity here. And on the shorter time frame, actually, I will jump into the 1 minute just to show you guys where the entry came. But this is the liquidity that I watched get ran out. Was looking to see if we pushed up to that London open or pre-market open high. And when I saw us not push up to there and start to show some bullish indication or bearish indication, then I took the short entry. Again, up on the silver bullet, down, and then at that point rallied up into the lunch macro, basically consolidated during the New York PM session. If you were tracking trades on the 5-minute chart, what you might have been watching for is this 5-minute fair value gap inversion, right? And when we inverted it, we popped back up into it. You could have taken that trade and you would have targeted the previous low. Okay. Didn't end up hitting the low, but it still ran out this liquidity level. Could have been a nice trade in there. Also, we get after the silver bullet, we get a bullish 5-minute fair value gap, right? And it trades back into it. There would have been your entry. You would have put your stop at the previous low. And where would you have run it? You could have run it back to the previous inverted fair value gap, could have run it back to the previous level that we had targeted, or the silver bullet high macro. You can see it only hits the inverted fair value gap, does not take the other two levels. Okay. So those are a couple 5-minute entries that you may have been watching for. Now we'll drop down into the 1-minute chart. Just take a look at that silver bullet macro. For those of you who followed the trade during the silver bullet time macro, we got a really nice trade in there. Ended up going off, I think nearly like $500 or more. I left a runner. But pretty much what I saw here was a fair value gap on the 1-minute chart. Okay, and we popped down and we drew back into it. Now, I didn't measure this out for the call out, but you can see it also trades into the optimal trade entry on the fib level. And then we have our targets, right? 1, symmetrical swing. 2, standard deviations, right? Did not hit the 3rd standard deviation, but ran it down basically just right below 2 standard deviations. Now where it gets caught up, you can see here, there was a large fair value gap, a bullish fair value gap. We traded back into it and found support. Okay, so ways that you guys can be using those smart money concepts tools in order to optimize your trades. Now at that point, we pop down, we start to see some support. I didn't take these trades, but we have another fair value gap. And then we have another fair value gap. Either one of those, a lot of times we look for the second confirmation. So here we get the first fair value gap. So we're now looking for a long entry if you're following this, right? Then we get above the 20 period, which is not a smart money concept, but we're going to use the 20 period also as confirmation, right? As well as starting to see RSI gain strength. Then we see a change of character. Then we see another fair value gap, change of character. We draw back into that fair value gap, also hits the 20 period, and you can see runs up. That would have been another nice trade. 140.61. If you ran it all the way up, 142.82. $2 price move, right? Would have been about $200 per contract or so. So either way, nice trades in there using your smart money concepts tools. Definitely ways to make money if you know what you're looking for. So again, thank you guys for watching. Thank you guys for all the support. Look forward to bringing you guys some additional content. Don't forget to check out the links in the description below where we got the raw stocks links for joining the trading Discord. Hope you guys have success tomorrow, and we'll see you on the next one.